Recording in progress.
What's up, everybody? Welcome. Happy Thursday. Gerardo, Jarrell, always punctual. I love it, guys. Josh, there he is. Hope you guys are well. Happy Thursday. Welcome to another edition of Profits at Noon. You may have noticed I opened it up just a minute early here. I'm going to try to make a little more room for Richard and for our special guest, Tony, today. So Tony Edwards from Trader Smarts is back in the house. Sergio, welcome. We're going to get started in just a minute here, guys. Give everyone a chance to get in and get settled. Excellent. Let us know if you can hear us, if you can see us. If you're having any issues at all, please feel free to fire away in the chat. Howdy, Sergio.
Hey, Sergio. How's it going, man?
So we will leave a little time for Q&A today. I just want to mention that very quickly. Again, we do have a special guest in the house, Tony Edwards of Trader Smarts. So stick around. We got a lot to show you. And again, we'll make some room for that Q&A. Looks like we have a good crew coming together here, so we're going to go ahead and start ramping things up, guys. So guys, gals, welcome to the Thursday edition of Ninjacators' new weekly live event, Profits at Noon. I am your host, Nathan, co-hosting with the one, the only Richard Krugel. I've had the pleasure of working alongside this guy for over 5 years now. I've learned so much watching him trade. Very excited. Some of you know him already from our morning bell sessions, so you know what I'm talking about. Lots to be excited for here today. So in today's session, we're going to cover off our levels to lock as always. And so we're going to show you the levels that we're stalking. We'll steer you clear of all those news bombs. And you'll get to see all of this analysis play out in real time. You'll get to stay with us in the action. As I have been mentioning, we will have a newsletter to accompany these sessions for our levels to lock. So you can stay up to date with us even when we're not live. Richard will be dishing out those levels bright and early in the AM. We can't wait to share that with you. So as we progress into March, we expect to have some updates for you guys next week. Really quickly, do want to mention again our special guest. He has been with us Monday and Wednesday. He is back today. Tony Edwards of Trader Smarts is here with 2 more brand new setups, as well as a special trial offer to his software. So we're really excited about that. Before he steps in, I will come back and check in with you guys, and we'll let him take the reins for the rest of the session. For now, I'm going to go ahead and bring in the man, the myth, the legend, Richard Krugel, our host today for Profits at Noon. Richard, why don't you go ahead and take the reins, and I'll step back in before we let Tony take over.
Perfect. Thanks, Nate, as always. And welcome, everyone. Thanks for joining us here again today. So as always, we'll be going through the levels that I've been stalking for the most of the day. Again, Mondays, Wednesdays, and Thursdays. And like Nathan mentioned, we can't wait for that levels to lock newsletter to come out. And then a lot of these things will make a bit more sense. But that's still in the pipeline and supposedly almost ready. So I personally can't wait for that myself. But before we dive into the analysis part today, just a quick reminder that all information in today's session is provided for educational purposes only, and it's not an offer or recommendation to trade futures, stocks, options, or forex. All right, let me just get that away. Can you guys hear me all right? Let me know in the chat there. Can you see my screen? I'm on the ESCR 240 with my levels to lock and loaded, I can probably say. All right, so if you guys stayed till when Tony was doing his presentation yesterday, he was saying that the market's going to still, or the ES potentially still move lower to that zone he was talking about. Beautifully, it did. It actually reversed to that area. I can't really remember what the sort of upper and lower limit of that was, but we're probably going to have a recap from Tony a little bit later. But anyway, we've had a little bit of a bounce during the overnight session. Price actually moved slightly lower. This is after, obviously, we had this little bounce yesterday since I left you guys, and then price just continuously moved lower. It failed to actually make it to, substantially give us a bounce, should I say. So price sort of closed a little bit below the S1 level, 3,939, hovered around there during the overnight session, and is trying to make its way higher now again. So this could be a potential case where, we've been looking at this area prior to price actually moving into that, I think this was what, about the 23rd of Feb or something. Price bounced from there a couple of times, failed, and it might be a situation where price is now pulling back into support, turning into resistance sort of thing. So if you joined yesterday's session, I was talking a lot about also looking at in combination with some market geometry. I'm going to pull that in just a sec. And that price would really need to start clearing some specific levels for me to start thinking that a potential low is in. What I mean by potential low, I'm still seeing this entire pullback as a potential correction. That being said, also had this sort of line in the sand here, about 3,900. If price were to break that, then I really need to start considering whether this entire move that started in the beginning of Feb was actually corrective or potentially the start of something much bigger, i.e. potentially a much deeper decline. But anyway, we're sitting with the pivot point at 3,965 today. Again, projected range highs at 3,976 and 3/4. Not sure price is going to get there. Obviously, anything can happen, but it's really been struggling, making its way up again. So you see, I've got this ray drawn from yesterday. I just quickly took off my pitchfork, and what's the other one? The Fibonacci retracements that I had. I just want to show you something here on the bigger picture. So I had that off so you can actually see what's going on here with the chart being without the chart being too cluttered. So it was yesterday where I was saying that, you know, price would need to overcome this line running down to the downside here. Then I also have this ray that I've drawn parallel to some of these median lines, and I've attached them to these previous highs where price actually made lower highs, but they sort of just moved above that median line and failed a few times. So you can see at this angular resistance that price continued to fail at that same angle many times over. So I'm actually thinking we could potentially still move lower, but on a little bit on the sidelines, should I say cautionally bullish, but won't really get excited on the bullish side until price actually starts breaking this center median line here, which is currently at around 3,957, potentially close above it on a daily or the 4-hour. Price still needs to overcome a pivot point of today, which is at 3,965. And then very importantly, if this angular line where price has failed so many times during this entire decline, if that gets broken, and that's sort of roundabout our projected range high for today at 3,976 and 3/4. And obviously this will change tomorrow since this indicator takes into account the previous day's volume. Then, you know, I would start thinking that a potential bottom is in. You know, we could also switch down to a smaller time frame, like an hour, and really would like to start seeing the first sort of evidence of a 5-wave sequence to the upside. A 5-wave sequence that breaks these levels, especially clears this angular line here. And if that happens, then I will switch bullish. For the time being, I'm sitting a bit on the sidelines here. I think support can come in at any time. That being said, could potentially still move lower. Now, if you look at these fib lines that I've drawn in here, it's actually taken from, and that's fib retracements, from these lows in December last year to these highs in early Feb this year, right? Now, we've had one good bounce from the 61.8 retracement, around about 3,949. When was that? It was last week or the week before. Move higher, sort of tested a little bit, hovered around, and then broke below it. So there is the possibility that price could still make it, and this happens quite a lot when you see corrective moves or even trending moves that price reaches, in this case, a lower median line, and then this corrective move ends. So we got lower there, sort of a confluence between a low median line and a 78.6 retracement to around the 3,879 level, let's call it 3,880, where price could still potentially move towards. Now, we also got a cluster of rejected range lows here, or the deviations of those. Again, this will change on a daily basis, but that is still, in my mind, a possibility. Now, if that does happen, then this would have been broken, a previous strong area of market structure, in my opinion. But that being said, in the bigger picture, I'm still thinking that we potentially had some sort of a wave 1, a 2, a 3, a 4 with an extended wave 5. So this could potentially have been the start of a much larger move, and this just being some sort of a correction. So even if this level gets broken at 3,900, I will still give it space towards that 78.6 retracement. See by then, if price does move lower, we've got any projected ranges at that area. And, trade accordingly and set targets at those levels. And that could still be corrective in nature and then potentially see a move to the upside. Any lower than that, and then I really got to start thinking that this is just the start of a much, much, much larger move to the downside. So that's what I'm looking at. Price sort of a little bit, not really making a strong case to the upside at the moment. Again, within the zone, it could potentially now act as resistance. And like I mentioned, just as a quick recap, price would need to clear as first evidence that we might have a low in the centimeter line, currently around 3,957, break this pivot point, and then also break this line. It might look very insignificant to a lot of you that's not used to market geometry, but I do like working this in sometimes, because quite often markets do respect angular support and resistance as well. And quite often when you deal with market geometry, you start seeing these levels broken, and then you can sort of say with a relatively high degree of confidence that if you think a correction has ended, that it might have just ended as a price makes its way back up again. Right. NQ, also strong decline. Price again similar to the ES, broke below the S1 at 11,892 and 3/4, sort of hovered around a little bit, made its way up again, and the same thing here, trying to build its way back up again. In trading 101, previous area of support might now turn into resistance. Got a little bit of reaction here. We might see from Tony if he's got any of those levels of upside resistance when it's his turn after me. So it'll be interesting to see. So please stay on for that. But yeah, I think if price would take out the current 4 hours candle low without making its way similar to the ES to the upside, then we could potentially see another move low towards S2 at 11,800 and a quarter. Whether that's today or tomorrow, we'll just have to wait and see. So cautiously bullish, although I won't be trading bullish to the upside at all. Still waiting for that evidence of a potential low, and might have to have a bit more patience here and start seeing prices move towards pivot levels, start breaking previous areas of market structure. In this case, as price was moving down to then just significant, well, to, I would say, a relatively high degree, say, of confidence that a potential low has completed. Right, so looking now at the YM. So sort of sideways movement here. It's all stuck within this previous candle over here. Price moved a little bit, same as the ES and NQ, below the pivot point, and that today's pivot point was at, let me see where that label is, 32,750. Price came within a tick, I think, of S1 at 32,635. It's been testing the pivot point. We'll have to see if it actually closes above today's pivot point. But same sort of thing. We'll probably have to see price break out of this range. But again, I'm going to be closely watching what the ES is doing. If it's still going to move lower, potentially going to drag the YM and the NQ down with it. Obviously, different markets, different indices, but they all sort of move, in similar direction, although the price structure is not always the same. Right, and then we have the Russell. Same thing here. Although price didn't take out this previous low here that was set, when was this, on the 24th of October just yet. Came very close to doing that. During the overnight session, price closed below S1. That was at 18,889. And same sort of thing here, sort of been just moving a little bit sideways. Did reach S2 at 1,876. 0.7 is now trying to break above the S1 level. So same sort of thing. We'll just have to wait and see if we can start getting direction here, or some evidence of a low is going to start forming. Again, we'll also keep a close eye on what the ES and the NQ is doing. This brings us to gold. Now, this is a fantastic example where I said yesterday we had a projected range high. And there's these dotted lines here. I think that was around 1849. And that also had a bit of a confluence with the cent median line running down to the downside. Now you can see how we sometimes have indicators as well as angular, in this case resistance, sort of have a confluence area. Quite often you see either resistance step in this case, with potential reversal to the downside. I'm still thinking that this might have been the first move higher of a much larger move to come. Now, price did move low from those areas, right? During the overnight session, made it below the pivot point at 1841.9. Didn't make it to S1. But if this is now, let's say, a correction, it might still take a while to materialize, maybe another day or so. This could potentially have been the start of a correction. You see how price pulled beautifully back to the cent median line, tested it to the T, and might move lower now again. So if we're going to see another move down like this, we'll then have to see by Monday potentially where our projected range lows are, where our S1s, S2s are, etc., etc. And then treat this as a potential corrective wave that might actually correct to a fib level as well. You see we have that beautiful 61.8 at 1826.8, around where we got this dashed median line over here. So this is my thinking. Still think that that gold is still moving lower, in my opinion, potentially correction. You know, if price starts breaking these lower fib levels, potentially breaking or extending towards your lower deviations, projected lower deviations, then you might have to start thinking that this was just a bounce with another low to come. So we'll treat it as it is. Sometimes you might have a directional bias or thinking what's happening, but in trading, you can't really always stick with your guns. You have to be flexible to change to what the market's telling you. Remember, always the market's always correct, right? Always right, and quite often you'll be you'll be wrong and on the wrong side of it. At least try to follow a plan is kind of want to do, and I think the same thing Tony told us yesterday as well. So treating this as potentially a correction, the only thing, let's say we do get this nice move to the downside, then I would like to start seeing some impulsive behavior to the upside, breaking in this case and closing above on the 4-hour, the cent median line where it's now found resistance. Whether it's going to happen next week, tomorrow, or maybe even today, that might signal that a correction's ended and the next wave higher has started. So for now, I'm sticking with my bullish bias, but over the very near term, thinking that price could still head lower, but potentially just corrective in nature. Right, that brings me to crude oil. Same thing, very interesting. Where did I leave you guys yesterday? We had this move to the upside. I was saying this potentially was an ABC. We had a sharp move to the downside, and that we potentially had an A. And I think it was yesterday we were saying about here expecting another move to the upside. We got that. And this now looks like an ABC X ABC, i.e. a double zigzags, two ABCs after each other, which might mean that this was just a correction. And if you go look at the bigger picture of crude oil, I don't have the data loaded on the daily. Crude oil is still pretty bearish. This looks like a massive range on crude oil, but I still think that there's a possibility that this was just corrective in nature. Again, we'll have to recap things on Monday next week, see where things are at. But price already hit R1 at 78.34. It opened above today's pivot point at 77.23. I think if this pivot point gets broken to the downside, that we might have seen at the end of this double zigzag that I talked about. Also very interesting, before I hand things back to Nate and then for Tony to take over, if this was an ABC and that was your first A and this was a B, you got beautiful symmetry on your secondary wave here, which is typically how ABCs work. Beautiful 100%, traveling the same distance than the first move to the upside. So this could potentially have been your first A, B, C, right? And let me just take this off quickly. The entire move also ran into 161.8, but what I quite like to do as well is then if this is your secondary ABC, to see if there's sort of any fib extension relationships between this C wave and this first A wave, and price hasn't reached at 100 yet. It doesn't have to actually do that, but in many cases you get a lot of symmetry and single zigzags and double zigzags and so forth. Although there might be enough evidence to already say that double zigzag potentially ended. If you measure from where the C wave of the first one ended, projected from the Y wave, sorry, ABCX, and they potentially have an ABC, also falling short of it, 123.6. So there could still be another move to the upside, but like I said yesterday, just looking at the structure is quite often why I do employ a little bit of Elliott wave analysis, and not so much, I would say, in trending conditions, but mostly in corrective waves. I've really put a lot of hard work during the years in studying corrections. And if you think you're dealing with a correction, then you say, like, okay, then this might happen according to what price structure is done. Then if this does happen, then it sort of reinforces the idea that, you know, a correction might end. So if this was corrective, like I said, we had a move lower yesterday, then we should get another move to the upside. Now we got that, and now it's all about a case to see if price will actually, you know, start reversing low. And if it starts breaking these pivot points, S1's previous market structure, let's say tomorrow, next week, whatever the case might be, then we can start looking at lower levels for potential targets. Right, and that's my analysis for today. I'm trying to give Tony as much time as possible today. I know you guys were quite active with him on the chat there, so please keep that up today. I'll hand things back to Nathan. He'll take over, and then it's your turn, Tony. Thanks very much for watching, guys, and I'll disappear off screen and mute myself and stop share, I suppose, right?
Sure. Yeah, and we'll check in with you again, Richard, before we wrap up today. But thank you, as always, for the excellent analysis. Again, guys, we will be back on Monday at noon Eastern to follow up on all these levels. And then ideally, we'll have some news on that newsletter for you to accompany this that will have all those levels to lock readily available for you each morning. So thanks again, Richard. We're going to go ahead and shift over to our special featured guest today. If you joined us in the prior sessions this week, you've already met him. His name is Tony Edwards of Trader Smarts. He is an independent trader based out of Seattle, Washington. As I mentioned, he was a big YM trader for many years. 2020 came around, shifted the landscape a bit, and he has found continued traction and success trading the ES. So he's got some exciting stuff to share with you today, including 2 new trade setups he wants to show you, as well as a special trial link to his software that we're going to share with you. So really quickly, again, I'll just remind you, very cool background for Tony. Tony, his father was a noted psychologist who developed multiple personality tests and is credited with bringing modern statistical analysis into the field of psychology. So Tony was exposed to all of this stuff at a very young age, and the catalyst being the market crash of 1987. Tony was about 14. And it really set him on the path he is on today. In 1994, at the age of 21, he wrote his personal mission statement to trade stocks on small short-term price fluctuations for monthly income and reinvest a percentage of that income in long-term growth companies and capital appreciation. So all these years later, Tony is still here incorporating those techniques into both futures and options as an integral part of his plan. And he is going to share that with you now. So without further ado, Tony, if you want to step in here, take the reins, take over the screen share, and we'll dive right into your setups, and then I'll check back in with you before we wrap to do any Q&A and make sure everybody has a chance to hit your special offer link.
Cool. Sounds good. Thanks, Nate.
Perfect. Yeah, absolutely. And I can see your charts looking pretty good. Guys, fire away in the chat if you can see and you can hear Tony okay, and we'll let him take over.
Awesome. Yeah, thanks again, Nate. Thanks, Richard, for sharing that. Like I said yesterday, I always like to see how other traders are viewing markets, so it's really cool to see another unique approach. And yeah, it's pretty cool. I'm liking those pitchforks and just kind of the geometric way that you're viewing things. One of the things that I do to create my levels is look at markets in what I would deem a proprietary fractal way. I have this proprietary way of looking at fractal analysis, so the geometric way that you're looking at things kind of resonates with me quite a bit. Okay, so we're going to I'll give you guys just a few more here on the last couple of profits and moon sessions. I will give you a brief overview of what I do. Then we will look at the next two trade setups in the sequence. And then at the end, we'll take some questions. So just recapping from yesterday. Well, first, so I provide analysis for multitude of clients for 7 different markets for the ES, YM, NQ, 6E, CL, and GC. I used to trade all of those except ES, NQ, and RTY as well. Was a YM trader for many years. Then in March of 2020, when we had COVID and the spreads in YM just got super wide, I made the switch to the dark side and started trading ES. I'd always hated ES, and I've really never looked back. So 18 years of YM. I started trading YM in 2002 when the contract first came out. Always disliked ES, but finally made the switch, and now I'm trading the instrument that most people are trading if they're not trading NQ. I find ES and NQ kind of beat the two main ones, and then RTY and YM is kind of the dog that no one likes for whatever reason that may be. So anyways, we're looking at this ES chart. This is the chart that you saw yesterday. So the analysis consists of a written plan that looks like this, and it has levels that I'm looking at. So just a multitude of levels. And then there is contract notes for the day. So today's note said that I am still favoring shorts, key to the short execution target zones, and targeting down to the long execution target zones. Then there's a macro note. So this has bigger picture context. And this is just stating that the 39.94 half MTS number is the immediate over underline on a big picture time frame. Then it has the execution target zones. These are the 3 areas on each side of the market. So when Globex reopens, we'll usually be trading somewhere between range short and range long. And then there's a line in the sand in the middle. That's our immediate over under for the session. And then range short to extreme short are the 3 areas on the upside of the market where we can target our long trades to and expect sellers to defend if we price test up that high. And the converse of that is range long to extreme long, where we can target our trades down to our short trades and expect buyers to try and step in and defend if price is able to test down to those levels. And then these are just the macro numbers to be aware of on a bigger picture time frame, MTS numbers. So that's what the written analysis looks like. It's delivered via a desktop app as well as a mobile site that you can access from any platform, Android, iPhone, whatever. And then there's the indicator that plots the analysis. So all of this analysis is hand done by me. It's not computer generated. I do this every night for my own trading. And so here's what it looks like on a visual presentation. So if you were here yesterday, you'll recall that this was yesterday's session. Here's the session break into today's Globex Open. And the expectation yesterday was the price would likely find sellers against the short execution target zones. So we had tested up into range short. Sellers stepped in, and we got this move down below the line of the sand into a new low. If we recall, last Friday, the low was right around 39.47. So we made a new weekly low and then had this bounce right back to, I think it actually hit the line of the sand fairly accurately. And then sellers defended. And I had said yesterday that if sellers are able to hold this under the line of the sand, the expectation was eventually that we would come down and test this range long zone. So you can see we kind of just held in this balance pattern into yesterday's Globex close. And then when Globex reopened, we had a line in the sand shift down for this session. Sellers or buyers pushed up into this area. And then immediately we had this reaction, which was the strongest move we've had so far all session, pushing us straight from the line of the sand right into the target at range long, where buyers stepped in and pushed it back to this 39.45.75 TS number, also in line with these prior lows and last week's low at 39.47, where sellers stepped in again and pushed us down to the overnight low. And then since then, we've just been finding buyers against range long. So some of these levels will sit here for quite a while until they're tested. This has been a target down for a few days now. So on my intraday trading, I've been focused from a short side bias coming down into this level. Just to give you a little context of how I'm seeing ES, while I look at ES for right now. It'll take too much time to go through other markets, and you just got Richard's expert analysis on those markets as well. So this zone had been sitting there for quite a while. You can see that it shifted from range long to highest odds long, then to range long today. Now that we've come into this big target, things get a little less clear for me. So like the last couple of days, I've been executing from a short side bias only, targeting down into here. Now that we've reached this, there's an opportunity for buyers to step in and kind of, work things all the way back up. Again, this 39.94 half is really the big picture over under. And, but that being said, sellers have been in control on a daily chart for the last few sessions. So if that is to remain intact, that sell side bias, I would expect price to not really be able to reclaim today's line in the sand, and especially today's range short. And then we could get further continuation down into highest odds long at 38.899 half to 38.92 half, and even into the extreme at 38.7175 to 38.69 half over the next couple of sessions. We have one session left in this week. So we'll just kind of see how that plays out. Back over here, and especially over here, then we're going to be in a situation where we're testing back into the MTS number, and if we start holding above today's line in the sand and this range short, we could essentially test all the way back up into 54.75 from below before we, continue lower. So like trading these things zone to zone is kind of how I view things. And I use these execution target zones to give me directional bias for the day and kind of plan my trades around as far as where I'm going to be stalking either long or short, and where I'm going to be targeting my trades to. So that's how I'm viewing ES. That's just a little overview of what's taken place the last couple of sessions. And now I will proceed into the setups. So let me switch over to that screen. And we will take a look at the next two setups. If there's any questions along the way, just go ahead and type them in the chat. Nate will see those, pass them on to me. I'm happy to take them as we go along or at the end. Doesn't really matter. I don't mind being stopped. So let's take a look here. So first of all, risk disclaimer. As I'm sure all of you know, futures trading involves substantial risk of loss and is not suitable for every investor. Any investor or trader could potentially lose all or more than their initial risk capital. Risk capital is only money that can be lost without jeopardizing one's financial security or lifestyle, and only risk capital should be used for trading. Only those with sufficient risk capital should consider trading. Past performance is not indicative of future results. So we're looking at 7 setups. We've gone over 4 of them. We looked at the zone fade on Monday, the consolidation breakout. I'm sorry, we've only looked at 3 so far. We've looked at the zone fade on Monday, consolidation breakout, and the consolidation pullback continuation on Wednesday. Today, we're going to take a look at the impulse pullback continuation and the BIL move. BIL stands for brother-in-law. And so let's just get into it. I'm going to repeat myself about market context and just an overview of how I view setups in general, because this concept is super important. So please hear this. And you'll hear this. You can go back and look at the last couple of prophets of noon, and you'll hear me saying the same thing. So for me, market context is always key. It's super important. If I don't have a context of what's taking place in the market, then individual trade setups are just simply not valid. And the example of that is the last few sessions, I had identified market context as being sell side biased and likely wanting to test down into that range long area that we just looked at in ES. So all of my intraday trades were taken from a short side bias. So I was essentially only taking shorts. and I'll put a disclaimer there saying that just because you have a market bias, of course, doesn't mean that it needs to play out that way. Or just because you've established context does not mean it needs to play out that way. So we could have easily not tested down into range long and, resolved above range short and started squeezing prices higher. That's perfectly logical thing. But if you aren't able to establish what you think context is and what your main what your main ideas are for the market, it makes it extremely hard to trade. Then you're just seeing it set up here. You're going, oh, I should take a long, I should take a short. And you're going to just be confused and frustrated and likely unprofitable. So what do I mean when I say market context? The simplest way to view it is, do we have a bullish bias, a neutral bias, or a bearish bias? And what are those biases on each time frame, being higher, intermediate, and a lower time frame? And then also, is there anything known that could come in and change the bias or change the context? So like a FOMC announcement, or do we have a Fed speaker that's going to speak, or something known? So when I come in the morning, I'm only trading right now pretty much from US cash session open until the European close, so only for a couple of hours, and then I'm done with the day for the most part and on to other things. Just as I'm aging, there was a time when I would trade essentially around the clock back in 2008 financial crisis. I was trading, napping, and kind of getting right back into it. I'd trade the European session quite a bit. Now that I'm older and I value my sleep, I'm really trying to get away from being in front of the screens quite a lot of hours. So I'm trading the cash session open to the European close. So when I come in the morning, the first thing I do is I take a look at my chart. I'm trading mostly ES and CL, and I'll just simply see where is price in relation to the execution target zones, in relation to the line in the sand. So if price has pushed up above range short, for example, in the overnight session, then I know just with a quick glance that the bias is likely going to be long-sided or a bullish bias, because buyers have been able to push price over the initial area where I'm expecting sellers to defend. So if price is trading above range short, just with a really quick look at the chart, I can see, okay, we're likely in a bullish bias. And another thing I'll do before I start trading the session is I look at a daily chart. Sometimes I'll even look at a weekly chart, even a monthly, if I need to regain context, because I'm always trying to determine what is the context. And then I will go to my execution chart, which is a 128 tick chart after I'm taking a top-down approach, and I'll go back to the Globex reopen, maybe even a little bit into the prior session, and I'll just review what have we done in the overnight. Where did we open the Globex? Where did we put in the overnight high? Where did we put in the overnight low? What kind of price swings are we seeing? Are we in a choppy environment? Are we in a directional environment? Who has the largest swing? Is it from the opening swing? Is it from the overnight low to overnight high? Is it from the overnight high to overnight low, etc.? So I'm just looking at what price has done to help me determine what price is trying to do and what it's likely to do next. And I do, like I just mentioned, I do this across all time frames. So that's how I'm determining context and bias for the trades that I want to stalk in the current session. Okay. So the caveat to market context, and this is where my number one trading rule comes in, is that in trading and in life, frankly, anything can happen at any time. So at any time, any outside force can come. Outside force is just going to be another market participant, can come in and move the market in the complete opposite direction that we've just identified context or bias to be. So it could be, an unexpected Fed cut where the bias is bearish, and then all of a sudden we get a rate cut, and the S&P is up 100 points in a minute. I've seen this happen. Or like an earthquake, or some hedge fund that's getting liquidated, or just anything. It could be anything. Anything can happen at any time. Always keep this in mind when you're trading. And the only thing that we can do to protect against this is to manage risk in the trade that we're taking and just manage risk across the board. So always be managing your risk, because anything can happen anytime and we never know when that can happen. All right, so let's get into the next two setups. For most of these examples, I just simply went back into my Twitter feed, pulled some charts from the media feed and looked at the blog. I pulled a couple of examples from the blog. There's probably like 300 charts on the actual website that you can scroll through if you're interested to get more examples. And yeah, so if you want more examples, there's a ton of them out there. Any questions, you can always email me or send me a DM on Twitter. So we looked at the zone fade on Monday. We looked at the consolidation breakout on Wednesday. Consolidation, pullback to consolidation, and continuation on Wednesday as well. And today we're going to look at the impulse pullback continuation. One second. Okay, so again, any questions along the way, just go ahead and type them in the chat. Happy to take them as we go along, or we can hit them at the end. Whatever you guys want to do is fine.
Sure thing. We did have one question come through from Josh. If you want to hit that really quickly before jumping into the setups. Josh wanted to know, would you mind showing the ES chart and the ticks you prefer trading? Or maybe you could do that while you're doing the setups.
Sure, let me switch that over. I'll multitask here. Actually, I should have that chart already pulled up on my.
No pressure. We can just see everything you're doing on your computer.
Perfect. Yeah, here, let me just show that real quick. So this is, I only actually have one. So I'm on my execution chart, I have three 128 tick charts up. One is this chart right here. It's very basic with literally no other indicators on it except Delta and this MACD that I use. So what was I going to say? So the other platform that I use is eSignal. I have my main execution chart on that eSignal platform, which I actually don't have eSignal pulled up right now, so I'm not able to show that. But so my eSignal chart is aggregated data. So these candles are going to be, there's going to be more candles printed on the NinjaTrader chart than on the eSignal chart. The eSignal chart will really give a better visual presentation of what I'm looking at, but I have these all three side by side. And then I have my order dome on the right-hand side of all of these charts. So here's just the chart we looked at in ES yesterday. We can scroll back real quick to, the last two sessions. So this is what it looked like on my execution chart. And I'm executing at a very fast speed. 128 tick chart in the ES is pretty quick, even on my aggregated data chart on eSignal. So this is just what it looked like on Wednesday, Tuesday. No, sorry, on Wednesday. Here was Wednesday's push up into range short and selling. And then we came into the overnight session, the Globex for open and close. All right. Right here. And here was the push up into the line in the sand, and then the push down to range long initial. All right, just taking us through today's price action. So, and so this is on the far right of my chart of my execution screen. And what I'm looking at here is just simply price structure. So I'm looking for kind of what we talked about yesterday, right? Consolidation, breakout, consolidation at lows, pull back into the consolidation, continuation, these types of things. And I'm combining that with my eSignal chart, which is, again, that's where I have other things that I use. And yeah, so I hope that at least gives you a quick view of what I'm looking at least from one perspective. Let me go back to the presentation, and then we'll look at does that help, Josh?
It looks like that did indeed help. Josh says, okay, thanks. I couldn't remember the number of ticks that you like to use. 128, which we are in agreement. 128, obviously being an interesting number.
Yeah. Yeah.
Fantastic. Well, we'll jump into this next setup. And guys, just a quick reminder too, the prior sessions with Tony from this week are available on our YouTube if you want to see the replays and see those prior setups. But I'll give it back to you, Tony.
All right, cool. So today, two setups, the brother-in-law and the impulse pullback continuation. So the impulse pullback continuation is kind of just what it sounds like. It requires an impulsive move, a pullback from the impulsive move, and then a continuation to a new higher low that was made on the initial impulsive move. So again, just an impulsive move, pullback for the entry with the expectation that the market's going to continue in the direction of the original impulse. And one tell if the move is impulsive or not is, has it breached a prior key swing high or low on my execution time frame, or that could be on your execution time frame. Again, these setups will work across any time frame because the same patterns you'll find are just repeating themselves continuously in markets. We'll take a look at like what I mean by that in these examples. So here's the first example. This was oil from January 2022. And again, just to establish context, so we opened, follow my cursor, we opened, Globex open, tested into the line of the sand, pushed up into range short. This is the area that we're expecting sellers to defend. And here's a situation where range short is a zone, highest odds short is a single digit number. So in this type of a situation, similar to this down here, range long and highest odds, I'm expecting when the zones or the levels, the sell zones or buy zones are close together like this, as opposed to more spread out, it's kind of a good indication that we're expecting a higher low to form here, like an actual intraday higher low where we would get a move away from. So, we're pushing up. Buyers are in control here. Buyers are still in control. Buyers are still in control. Buyers are still in control. And now we're getting a situation where we have slightly lower high. And then we have this impulsive move down that just took out this last swing low. Do you see where my cursor is? I can't hear you guys, so hopefully you do. Unfortunately, we can't. It's not a two-way interactive communication. But so, one tell, like I said, is has it breached a prior key swing high or low on my execution time frame? So this is a 15-minute chart. It's not my execution time frame, but just assuming that it was. Here's the key breach of the higher low right here on this impulse down. So now we have an impulse down. It's about 150 tick move from this high to this low. It's in line with an area we're expecting sellers to defend. And so now we're getting a retrace back up. Retrace back up into range short, and then we get the continuation. So impulse, pullback, continuation. And there's another example of one here too. Like, price is going to go in the direction that it goes until it's met with a greater force, right? It's just like the Newton's law of motion. So, we come into this area where we're expecting buyers to defend. This is defended right here on first touch. It's defended again, and then we come into highest odds and we get this. It's not really like an impulse, but it's so we're looking at ES. So like a 200 tick move up in oil from 65 to 67, and then we get this pullback. And then you can see we had a Globex open and close here. So this is a new session. So range long remained the same. Highest odds long in this situation shifted down somewhere. I don't know where it was. Can't obviously see that or scroll down. So this is a situation where Globex reopened. We had this impulse up. And what the plan is saying is if we cannot hold above range long, then this low here is likely to go, because if we get under range long, the target is going to become the highest odds long for this session. And what price did was we had this impulse up, pulled back from the line in the sand, held range long, and then initially pushed up before we came down and into, unfortunately, I cut this example off right ahead of oil's pit open, but so I don't know actually what happened here. I have to go back and look and see. I might actually do that now. I'm interested. Let's see what it did. I'm assuming it took this low and tested down towards highest odds long. So, impulse, pullback, continuation. Here's ES from 2020. So establishing context. Hopefully we can get through 2 setups. I don't know. I think I might have more examples. So if that's not the case, we'll just do 1 today, and then we'll take some Q&A, and we'll come back for the other 3. So, Globex opened. We're trading against the line in the sand. Range long is fairly close to where we opened. And we're really just gaming out against the line in the sand. We get 1 push into range long, and then fires push it up. And again, all the way. This is on the European Open. Right here, this push down into range long. And then we are sideways into US cash open and still sideways. And then here's a situation where you can just tell this was 11 o'clock my time, Pacific time. So this was an FOMC announcement. And we had this impulse down on the FOMC. So impulse down below this prior swing low right here, and also below the European, the overnight low against the European Open. So FOMC announcement comes in, impulse down, and then we get this push back up. So impulse, pullback above range long, and then continuation. Impulse, pullback, continuation. And I had noted just on the public Twitter feed that if we can get, this was at 12:14, so like right about here, in the high of really when we're making this pullback, I'd said if we can get under range long, longs are very likely to get squeezed for a change. So we had clearly been in an uptrending market, and this was the first indication on this news event here and this impulsive move down that sellers could finally be taking control, and we could really start liquidating if we get below range long. So I noted again, 10 minutes later, 9 minutes later, don't get caught sleeping if you're long on a move back under range long. And as you can see, we came back under range long and really just kind of flushed out. The same chart. This is what I was looking at on the feed that I have for clients. Unfortunately, this feed is closed right now to new clients, but this just giving you an example of what I was seeing at the same time. So on this impulsive move down, I'm getting short back here into 86.75 on a half unit, and I'm using 92.75 risk. 92 is up here above line in the sand. And then my plan was just add into it. So I started off with half a unit. It's going to add into a double unit with the key to the line of the sand retest. So expectation is the impulse down through range long. Now we're getting a pullback. Technically, price should not resolve back above the line in the sand if this impulse down is going to be considered valid, or we would look for a continuation. So I'm looking to short back into, the initial one was 86.75, which, as you can see, is against all of these prior lows right here. So just looking for a favorable cost basis above range long, so that if price does push under range long, I can essentially just sit in the trade with risk off on the trade and let it work lower. And then I just noted that, the caveat is that we V-bottomed, like I just said, that we'd been in a bullish market environment. So we had been making a bunch of V-bottoms out of almost every low that had been formed. So if this was another V-bottom and then back over the line in the sand, shorts would end up getting squeezed likely again. We resolve back over the line in the sand, and price would probably target up to range short. But like I had said, if we can get under range long and hold, then longs are very likely going to be the ones that get squeezed. And that's just kind of how it played out. And then I said, if we get back under range long, the plan is just press add shorts. So look to add shorts on an actual break below this and, look for liquidation. So here's ES again from December of 2020. And so context, we opened Globex, traded against the line in the sand, just made this push up, push back down to the line in the sand. pushed down into range long. So this was a single digit number. Buyers defended, pushed back into this 32.74 where we had this consolidation and this initial low, and right against Globex, the low on the Globex open. Got another push into range long on US cash open right here. And then we had this impulsive move up that initially found sellers at the line of the sand, pulled back into this consolidation right here. And then, so I'm viewing this whole thing as one impulsive move up, taking out, again, taking out the prior swing high. It's an indication that we're getting an impulse. And then looking for a pullback and a continuation. So I noted that we're over the line in the sand. I'm holding a core from below that sand. So apparently we've gotten long. Probably either on, I don't remember, this is 2 years ago, but probably either on this test, initial test or second test in the range long on cash open, or into this pullback to the consolidation, kind of the trade we talked about yesterday. I said RS range short is the clear target. I expect that we get one good break or retrace down at some point before hitting the target, and that is where I will look to add to the core long. So at 810, so right about here, and we were trading up here, I said I'm looking for a flush to just under the line in the sand to be absorbed by buyers, myself included. And yes, so here's our impulse. Here's the push down to move just below the line in the sand. Here's our add for the long trade. Buyers quickly regain control, push us back over the line in the sand. We get one more test of it, and then it just marches straight into the range short target into the close of US cash session. So impulse, pullback, continuation. Here's YM from June 2021. Looking at 2 sessions here. So just to establish context, this session we opened, testing the line in the sand, down into single digit range long, buyers defended, gamed out the remainder of the session into the line in the sand, had this push back down into range long again where buyers defended, and we go into the next session and nothing is unchanged. So the execution target zones have not changed from session to session here. Open Globex again, just trading right sideways essentially against the line in the sand. We have the European Open right here, and then this is some, I don't know what this was. This was some unexpected news because it came at 5 Central Time. So we got this push up into range short, into the top of range short, and then push down. And then we had, I don't remember what this was, but we had this huge impulse all the way down here. So that took us straight through range long where buyers had stepped in, right? Here's our prior reference. Impulse, this is obviously a news-based event. You can just tell by where it took place and the volume that came in. And then we're getting the retrace. So impulse, pullback, pulls back right to range long. So here's our execution target zone. Now here's a situation where prior support, the expectation is that this prior support, considering this selling at range short and this push straight below this, oftentimes if we just flush through a level, like execution target zone, that is not defended, and again, this would be the 3rd test of this zone, or the 4th test if you count, 5th, 6th test if you count all these different little buys. But so impulse, pullback, the expectation is that this is where sellers will defend, and then we will come into highest odds long target. So impulse, news event based impulse, pullback to the execution target zone, continuation down to the target. Do we have time to look at this one, or would you want to save this for the next session?
Hey, Tony, we'll actually need to save that for the next session because we do need to wrap the top of the hour here. So just want to make sure we have a minute or two to get your link populated into the chat, as well as to leave some room for any Q&A today. So we will have Tony back next week. So just stay tuned. We don't know the exact day just yet, but he will be back next week with some more of these setups. If you check in the chats, you'll see I did just drop the link to Tony's special offer. He's got a trial set up for you guys with this software that he was just showing you. And he's also sweetened the pot quite a bit. He's knocked out a few barriers here. You're getting a free indicator license. You're getting all of his markets for 2 weeks. As a matter of fact, I'll let Tony get into it here. If you guys just want to check that link out, and Tony, maybe you can walk them through what they can expect, and if we have time for one question before we go, but we do need to wrap in just a minute.
Cool. Yeah. So not a hard sell, just if you're interested, check it out. But so I'm giving you guys a trial to every market that I do analysis for: ES, YM, NQ, RTY, 6 CL, and GC. That runs $347 a month. You're going to get a 2-week trial for $97. You're going to get access to the desktop app, the mobile app, and any platform that you use. You'll get access to the indicator. Normally, there's like Nate just said, a lifetime license fee to be able to plot the analysis onto your execution chart or onto all of your charts, and that's runs $400 for one platform. If you're using just NinjaTrader, for example, if you're using NinjaTrader and Sierra for whatever reason, or any other 2 platforms or any 7 platforms, it's $600, or you can lease that for $97 a month. I'm waiving this fee for you guys as part of this special with Ninjacators. And so this trial at $97 a month will rebill at the normal rate, but you're getting the indicator license for free. And go ahead and take the trial. Hit this button. It will take you to a checkout page. You're going to check out, get into the trial. If you want to trial every market and then decide, that I'm only trading ES, or maybe you only trade ES, but you still want to check out every market, that's fine. If you want to keep the subscription, just go ahead and email me. I will change the subscription to a single instrument, ES, NQ, whatever it is, and I will keep the free use of the indicator for the life of your subscription.
Very cool. Awesome. Well, thank you, Tony. And again, he's, like he just mentioned, knocked down a lot of barriers to be able to try this pretty much risk-free, and a small fee on the front end. Josh just wanted to give us a heads up. It is displaying as $99 if you go.
Oh, is it? Okay.
So just a little $2 difference there, but don't let that throw you off. Please, we encourage you to check out that link. Again, Tony will be back with us next week. We're going to pick back up on Monday with our normal sessions for profits at noon. Richard and I will be back at noon Eastern Monday to follow up on the levels that you saw earlier in today's session. So if you have any questions for Tony, you saw the link to his website. Check him out on Twitter. He's very responsive. Feel free to reach out to him directly. As far as Ninjacators goes, if you guys have any questions, any concerns, anything like that, just head to ninjacators.com. We have phone numbers plastered all over the website, as well as a contact form. We're always here. We're always available. And we're always here to support you. So feel free to reach out if anything else comes up. Again, this replay will be available on our YouTube channel as well as the other sessions with Tony. So if you want to catch up on those other setups, all of it is available on the Ninjacators YouTube. So we are going to bring this session to a close. We went a little longer than normal. Thank you guys for sticking around. We will be back next week. So Richard, again, thank you for your time. Tony, thank you for your time again. And it is the part of the session where I will briefly defer for some parting wisdom from our gurus.
Yeah, it's always great watching, like Tony said, how someone else trades. Also pretty cool how price moved into those levels he talked about yesterday. So yeah, it's all about really planning, having a plan for the day, guys, and sticking to that plan, but also just having the not the how can I say, the being hard ass about being wrong. You be wrong quite often. So just as long as you manage your risk, like Tony said as well, at least you're doing more than 99.9% of the traders out there do.
Sure. Absolutely.
100%. Well, I would just echo that. Nothing to add there. It covers pretty much everything. So yeah, perfect.
Awesome. Cool. And then, I'll bring it under the one banner again. Without a plan, we're planning to fail. So
cool.
Just remember that, guys. Always be prepared. And we will see you again on Monday at noon Eastern for another edition of Profits at Noon. Thank you guys and gals so much again for your time. In the meantime, have a great weekend. Feel free to reach out to us, and we will see you again on Monday. Thanks, guys. Bye-bye.
Thanks, everyone. Take care. See you Monday. Goodbye.
Take care, guys. Thanks again.
Cheers, Tony.